Earnings season continues, of course, and Akamai Technologies stock under some pressure this morning also after saying that profit fell thanks to, or maybe not thanks to, but because of higher costs and operating expenses. The company also announcing a restructuring. And joining us right now to talk more about it is Tom Layton. He's the CEO and co-founder at Akamai Technologies. Tom, the stock was down by about 7% with some concerns about higher costs. What's your reaction to that?
Oh, actually, we delivered a great 2020. Our non-GAAP EPS was up 16% to well over $5 a share, and revenue at $3.2 billion, up 11%. And we were especially pleased with our security business, which got over $1 billion in revenue last year, up 25%. All in all, we were very pleased with 2020 results and looking forward to future growth.
The street is not sharing your enthusiasm. Why do you think that is?
Sometimes that happens, and we're in this for the long game. And sometimes there's bumps in the stock price. We've had pretty steady growth in our stock price over the last several years, and I would imagine that would continue. The market is a little strange these days in terms of a very heavy weighting on hypergrowth. And, Akamai was very pleased with 11% growth in revenue and 16% growth on the bottom line last year.
Tom, what are you seeing from your customers in terms of what the services that you provide? Let's talk about maybe security and demand you may have seen for that.
There's a huge demand for security services. As you know, recently malware has been in the headlines with the SolarWinds attack. But malware is pervasive across a lot of attack vectors, and we have products that prevent or identify those kinds of attacks. So very strong, bookings in security. There's also denial of service attacks. Ransom DDoS attacks were extensive in the back half of last year. And again, we're in a unique position to help major enterprises fend off those attacks so they don't have to pay the ransom money. And, account hacking, where the criminal is trying to take over your bank account, your gaming account, your commerce account. Those attacks were up by a factor of more than 4 last year. So that's an important area for Akamai to help customers in identifying when is it the real person who owns that account that's trying to log in.
In June of last year, your company started watching accounts receivable pretty closely. I know some of your customers were looking to extend the terms of their payments, maybe out to 90 days. Has that continued? Has that tightened up? What are you seeing now?
To be honest, I'm surprised it hasn't been worse given the global economic conditions. Obviously there's pressure in the travel verticals and in commerce. Now, commerce is interesting because commerce companies need Akamai services more than ever, as more of their business moves online. But commerce companies that had a significant brick and mortar presence are, hurting. And we are helping customers in the affected verticals, help them weather this storm in, return for the long-term relationship.
You took a charge of just over $26 million in the most recent quarter for restructuring. I read through the parts in the release that detailed the restructuring, why you're doing it, what you're moving around about 3 times. And I have to admit, I still don't fully understand it. Why are you doing it? It sounds like a lot of the people that were already there leading things have been promoted to new jobs doing these things. Why is it costing $26.8 million for that restructuring?
Well, there was a reduction in force as part of it. And that results in the restructuring charge. About 2% of the roles in the company. Now, on balance, Akamai is growing. We added net last year about 600 positions, and we'll net this year add several hundred positions more. What you're seeing is, increased investment in areas like innovation, new product development, and security. Serverless computing, IoT, 5G, areas that we think are going to drive future growth. And at the same time, there's areas that we think won't be as productive in the future. And so, of course, we're reducing investment there. And that's what results in the restructuring charge.
Shepard Smith here. Thanks for watching CNBC on YouTube.